Welcome to the Real Estate Guys radio program. Thanks for tuning into the show. It's a new year, and is it time for a new plan? Today we're going to talk about your real estate investment outcomes for 2021 and beyond, and how you can take advantage of the new possibilities. Today on the Real Estate Guys radio program.
Are you an accredited investor looking for reliable cash flow with some additional upside? You probably realize that energy drives all economic activity. The COVID-19 global slowdown created a temporary crash in oil prices, which in turn opened up a tremendous but little-known opportunity. This unique situation has allowed a seasoned team of oil professionals to craft a compelling structure that locks in profit when oil prices are low, while capturing significant upside when prices increase. And this offering leverages proven oil production, not risky exploration. Sound intriguing? Then your first investment should be the 20 minutes it takes to watch a short video that will detail this high-yield passive income opportunity. Simply send your email request to blueridge@realestateguysradio.com. If you're an accredited investor looking for predictable yield with sizable upside, email blueridge@realestateguysradio.com. That's blueridge@realestateguysradio.com.
Welcome to the Real Estate Guys radio program, and Happy New Year. I'm your host, Robert Helms. With me again this year, as he is pretty much every year, it's our co-host financial strategist, Russell Gray.
Hey, Robert, I've been the temporary co-host since I think the middle of 2004.
Yeah, so far so good, man. And I know this is one of your favorite times of year because this is when we get a clean slate. This is when it all starts over. This is when a new year faces us. And what we want to talk about today is the new possibilities and your new plan.
Yeah, there's been a lot of talk in the news about the Great Reset. You know, if you follow economic news in Davos and the World Economic Forum, been talking a lot about the Great Reset. Jim Rickards has been talking about that in his books. But this is, you know, the time of year where you personally can do a great reset, where you get a chance to take a look back and say, hey, this is what worked, this is what didn't work, this is what I liked, this is what I didn't like. You know, you're rearranging things in your portfolio, maybe things in your life, relationships, habits, all kinds of stuff. So yeah, it's a great time of year to just take a total inventory of who you are and where you're headed, and then start to work on making those adjustments.
Of course, we're about to head into our annual goals retreat, which is all of that and more, and really designed to be very introspective and cover all areas of your life. On the 1 hour show today, what we're going to talk about is really your real estate business. And so we'll assume that you've done the work you need to do on yourself, figuring out your goals in terms of health and relationships and family and spirituality and even your finances outside of real estate. But when it comes to your real estate business, there's kind of two types of investors that listen to our show. There are the people who are way into it. It's what they do for a living. They're syndicators, or they're developers, or they're in the trenches as attorneys, CPAs, real estate brokers, mortgage professionals. A lot of those folks listen, and we love that. And then there's folks that just kind of invest on the side. And it's really easy if you invest on the side to just kind of let things go along status quo. And we're going to jar you a little bit today, I hope. And, you know, maybe it's a wake-up call for you to just take a special look right now. This is not just any new year. This is a new year following an extraordinary year. Whether 2020 was extraordinary in a negative or positive way for you, or like many of us, a little of both, it's a wake-up call to real estate investors for sure. There are lots of types of real estate that are not doing well in the wake of COVID, and there's others that are doing very well. And so the big picture on this is you're going to, through the course of this program and beyond, be soul searching about your real estate business, meaning what is it that is working that you want to keep doing, that you want to even double down on, and what are the things that maybe need to be changed? And so there's this concept we use called zero-based thinking. We didn't invent it, but we like it, which is knowing what I now know. Would I get into this deal, market, relationship again? Knowing what I now know. I got into a market because at the time it made a ton of sense. Knowing what I now know, would I still get into that market? When we take investors on our field trips, one of the concepts we teach, which is universal in any market you go to, is to look around at the current stakeholders, the people that are already in the market. If you're thinking about a new market. You go in and you look at the people that are already there. They're already in multifamily. They're already in single family. They're already in retail or commercial. And ask this question: are those people, the current stakeholders, are they bullish? Are they bearish? Are they doubling down, or are they getting out of Dodge? That's just a great market question. Well, when it comes to you, you need to decide, hey, if it's working, let's not mess with it. Or maybe we want to do more of it. On the other hand, there's a lot of folks whose portfolios are challenged right now with eviction moratoriums and changes to the law and all kinds of trends, which we'll talk about before we're done. So this whole idea of zero-based thinking is knowing what I now know, what would I change?
And when you think about the things that you know, it's not just, I mean, really divide it up. Almost like a pie chart, and say, okay, what do I know now about the market? What do I know now about the management team? What do I know now about the interest rates or the financial environment? What do I know now about the tax code? What do I know now about, who I am as an investor? What interests me? Did I enjoy this? Did I not enjoy this? The demographic that I serve, the people that I work with. I mean, there's a lot of components to it. And sometimes, you fixate on one thing and you don't see the whole picture. And Michael Gerber's great book, The E-Myth. He talks about working on your business versus working in your business, whether you're a full-time investor or a part-time investor, or whether you're full-time in the business, meaning you're a property manager, a real estate agent, developer, something like that, or whether, you're an engineer, scientist, doctor, or whatever. At the end of the day, it's easy to get lost in the weeds of the things that you're doing and not take time out to see the big picture. That's why we do the annual goals retreat. It's such a huge thing. Most people understand the concept of setting goals. Maybe they take a day or a morning or a weekend and do it. But there's not really a process, number one, and they don't know how to really put themselves in that state of mind where you kind of open up your creative side and imagine. And there's a big part of that. If you're a creative, you understand that. If you've never been a creative, if you're kind of more left-brained, then you don't understand that. But I can tell you, as a guy that kind of is left-leaning, if you will, in terms of the way my brain operates, one of the things that I've had to learn in life is how important it is to unleash the creative side when it comes to Imagineering, what you want out of life and how things work. And the only way to do that is to get out of the weeds and to step back. Gerber talks about it, being strategic, having your strategic time and having your tactical time. I think great businesses and most people do retreats. They take time out. They get away from the daily grind to kind of think through these things. And if you know how to parse the problem, like I just discussed, and you know how to ask yourself the right questions, the things that you do, Robert, that you guide people through at the Goals Retreat, then you come away with better answers. I say all the time, if you want great answers, you got to learn to ask great questions. And I think that's a big part of the process that I hope we can cover some of in today's show, because I think a lot of people don't even know how to start the process of thinking. So zero-based thinking is a great place to start. Knowing what I know now about all of these different components, would I make changes?
And one of the things Michael Gerber says in the E-Myth is that you have to take time out and not just work in your business, but work on your business. And whether you are hands-on in your real estate investing business and you're out there meeting tenants and rolling up your sleeves and doing rehabs, or you're the kind of person that is the armchair quarterback and you just bring in teams of folks, either way, zero-based thinking applies. Zero-based thinking, if you're a hands-on person, is what are the things that you're doing that you need to continue to do? We use this other methodology, which is start, stop, continue. I look at everything on my plate and I say, all right, what new things should I start? And before I can do that, what other things should I stop, maybe delegate or get rid of altogether? And then what things should I continue? And that's a great way to kind of approach this. Sometimes as a real estate investor, you outgrow your team. And you may have, an accountant that has done fine by you when you had 2 rental homes, 3 rental homes, and a 4-plex. And all of a sudden, you're getting into multifamily, you're getting into syndication, you've become a bigger, better investor. You may have outgrown that person. I'm not saying you need to ditch any of your professionals, but you got to take a look, right? Sometimes your legal team isn't the right team. Sometimes it's your brokerage team. Sometimes it's your property manager. You know, we were fortunate enough to have the incoming president of the National Association of Residential Property Managers with us last week. If you haven't heard that show, check that out. Property management, obviously one of the key positions in your real estate investment portfolio business. Maybe it's time for an upgrade there. So zero-based thinking is just knowing what I now know. Would I do this again? Now, if the answer is yes, absolutely, okay, great. If the answer is no, it gets a little tricky. Just because all of a sudden you've had this epiphany and chance to get deep with yourself, it doesn't mean you just start coming out with a hatchet. I mean, you have to develop a plan to transition. Maybe you're in a marketplace that has done pretty well, but based on zero-based thinking, that question, that searching, those questions Russ was talking about, maybe you decide, you know, this is not a market I want to continue to do business in. So that brings up the question, do I just keep what I have and move to another market or another product type, or is it time to liquidate? Are there opportunities that you see in the market? One of the things we often talk about that a lot of folks don't who talk about real estate is just the transaction cost. When I go to sell a property, it's burdened with a lot of transaction costs, 6, 8, 10% in fees and commissions and transfer tax. So I can't just get in and out of real estate. And yet when I reach the conclusion that, you know, this is not the market I want to be in, this is not the product type I want to stay in, this is not the team I want to be with, then the sooner you can make those changes, the better, but you do need to plan it.
Well, I think a big part of that is the age-old question, compared to what? When you think about where your focus is, where your energy is, where your equity is, where your risk is, you have to say, when you look at all of that, compared to what? And when you're comparing product types, product niches, markets, you have to ask yourself that question. I want to also go back to that whole Michael Gerber thing, because, you know, when he talks about working on your business, there's two components to it I think a lot of people miss. Some people think working on your business just means process improvement, better systems, investing in training, and all of those things are very, very important. But there's a step above that, which is your vision. And that's, you know, kind of what we're talking about here. It's how you feel about your business, how well you enjoy your business, where you see it going, the context in terms of compared to what, you know, where am I headed compared to where I want to go? How is this performing compared to other things I could have in my portfolio? How is this team member doing compared to other people I could have? So it's not just, hey, I like it or I don't like it, because, you know, there's nothing perfect. You're always going to be able to find a flaw in anybody or anything or any market. There is no perfect person, perfect investment, perfect situation. And so if you say, well, I want something better, then you could be, you know, leaving the world of reality and moving into fantasy land and chasing unicorns. And you don't want to do that either. So it's really important when you do that, compared to what, you have kind of a process, a due diligence thing that you do to actually make a fair assessment. Because at the same time, you want to unleash your emotions and your creativity. You also don't want to be led by them. You know, you want both sides of your brain working together, your left and your right side, your analytical and your emotional, your conscious and your subconscious, your gut and your head, however you want to look at it. You got to have both components. And so some of that is sitting down with your team too, and the people finding out how they're feeling about what's going on and what they see and where they see the opportunities. You know, we spend a lot of time on the show because of, you know, the fact that we have the show. We get a chance to talk to a lot of great people. And when we're not talking to them, we're listening to them. I was listening to Peter Schiff this morning, and he's talking about how the market's opened up and the dollar versus the yuan, and how what's going on is the first time it's happened in many, many years, since 2008, which triggered me. I'm like, oh, 2008 was an interesting year, and something just happened in the opening of the markets that has never happened since 2008. Well, I'm not here to draw a conclusion about what that is or how it affects real estate investors, but I'm thinking about it. And the reason I'm thinking about it is because I'm listening to other people who don't live in my space. Peter he's not a real estate guy the way we are, but he talks about the economy, thinks about things, and getting that extra perspective can be a big part of the compared to what and refining your vision and making sure you're dealing in reality.
It's a brand new year. We're talking about putting together your brand new plan. We've got lots of ideas to share. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
In uncertain times like this, it's great to know there are two things you can always count on: high demand for affordable single-family homes to live in, and Terry Kerr's amazing Memphis team at Mid-South Home Buyers to find, fix, and manage the next addition to your recession-resistant real estate portfolio. The Memphis market is logistics and distribution dynamo with an economic engine that's essential to moving goods and critical supplies all over the United States. Quality rehab, proven profitable property management, affordable rents, and solid ROI make turnkey property investing through Terry's team a dream when it matters most. To learn more about Memphis and Mid-South Home Buyers, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com.
Hey, it's Ken McElroy. Listen to the Real Estate Guys, and so should you.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show, now entering our 25th year of broadcast. Just seems amazing that we started this a quarter of a century ago. We're glad you're listening today, and it's a good show to be listening to because we're talking about the new possibilities for 2021, the year ahead, and what changes you decide you need to make as a real estate investor. And there's lots to think about here. So you're not going to get it all done in this hour. Hopefully what you'll do is get those great juices going and the ideas circulating, and then set aside some time to really think through this stuff. Think on paper. Those great world-class questions, write them down and then ponder the answers. So we talked about this idea of start, stop, continue. There are certain things that you're doing that are going well. You may have a great property manager. They're doing awesome. Everything's rocking. Okay, no reason to rock the boat. Then there's other things that you are anxious to start doing. Maybe you've been a single family investor and you've been really looking at multifamily, and you know there's a lot of great training and opportunity and ecosystems to get involved with, and you're thinking about that. So the premise is that if I'm going to start something new, well, I've got to take something off my plate. So you look and say, well, of all the things I'm doing, what are the ones that aren't serving the purpose? And this assumes that you have the mission and vision and values that we alluded to earlier. And Russ, I know you talk to a lot of our Syndication Mentoring Club members about getting clear on this. And clarity is so important. If you don't know why you're getting up every day to build your real estate portfolio, it gets easy to let other things get in the way and to not give it the attention it deserves. I'm not saying you have to be full-time in it, but if you're even just a part-time investor with a portfolio on the side, when you are giving it focus, you need to have that clarity. Russ, maybe you can take us through a little bit on how people can find out what their mission, vision, and values look like.
Yeah, well, I mean, the other thing is, or worse, you end up chasing shiny objects. A lot of people do what I call the two-step, where they think that, hey, if I just make enough money, I can do anything I want. Clearly, money gives you options. And so there's nothing wrong with wanting to make money, but if the only thing you're doing is making money, you can end up being just terribly miserable, hating the journey, just betting everything on the destination. If that destination never comes, or you end up getting there and you find out, wow, this has no meaning for me. I mean, we all read the stories about people that have fortune and fame, and they commit suicide, or they self-destruct with drugs, alcohol, or broken trail of bad relationships. I mean, you can go on and on. So money alone success, if you will, achievement alone isn't really the litmus test of whether or not you're doing what you need to be doing. There's plenty of really happy, fulfilled people that you've never heard of that, don't make the Forbes billionaire list. And yet I think a lot of people who are on those lists might be willing to trade their lives just to have that peace of mind, that happiness that people have. Well, how do you get there? We talk about internal, external mission. Michael Gerber in his book, E-Myth, so again, if you haven't figured out by now, you haven't read the book, you probably want to go get it. It's a classic. Talks about primary aim. What is it that you want the business to do for you? So I talk about, how do you want to live? Who do you want to be around? What do you want to spend your time doing? What do you want to spend your focus on? What interests you? When do you feel most alive? Robert, you asked the question in the goals retreat, what is the activity that you can just sit down and start doing, and then the time just flies by and you don't even realize you've been at it for hours? You could go on and on and on and on. You just never get tired of doing it. Imagine being able to live in that space most of the time. So internal mission will help you do that. It's the thing that drives you through the adversity. If you have family, you understand that, right? When I was a younger man and wife and children that I was responsible for, they were my mission. It got me up every day. It made me face my demons, face my fears, do what I needed to do, push through adversity. I had mouths to feed. I had responsibilities. If you have that, then maybe that's enough. Maybe you need a little bit more. I can tell you, I've gotten to a season in life where I don't have those things anymore. And so I have to find new motivations, things that push me through. My children, my grandchildren, the future, my countrymen. There's the other things that motivate me. Whatever it is for you, causes you believe in. That's your internal mission. It's what you want the business or the investing to do for you. And I use business and investing interchangeable because I think most people think that investing should be run and approached as a business. Then the external mission is, what do you want to do for the world? And that's important too, because sometimes, you have to get outside yourself. We will let ourselves off the hook. But if we are working for a cause that's bigger than ourselves, I think most motivators, most people who are high achievers all work that way. A guy like Steve Jobs, he was worth $100 million at age 26, but he didn't stop. It wasn't about the money for him. He had plenty of money. What he wanted to do was change the world, and that was his mission. And even when he was fighting pancreatic cancer and he was at the very end of his life, he was still going to work every day trying to prosecute that mission, because that's how much it mattered to him. And so when you can find that level of motivation in life, then you can accomplish amazing things. And so that's why we spend so much time on this part of it, laying the foundation of your compelling why.
It's absolutely critical. And, not everybody has a driving external mission, but I'll tell you what, if you think through it, there are some things that real estate investors do for the world that you may just take for granted. The fact that we all provide clean, safe, affordable housing to folks that could not come up with a down payment and or qualify for a loan. They'd love to own a home, but they just aren't in a financial position to do so. Well, we come along and we solve that problem, and we interact economically. But we do a big thing. I remember the first time we had Robert Kiyosaki on our Investor Summit, and he talked about the fact that if you have a single home in your portfolio and you live in it, that makes you selfish. If you have a lot of homes and you allow other people to live there, then you're generous, which is a really different way of looking at it. So the more doors I have, the more generous I can be. Now, people take this even further than that. With new opportunity zones, there's a lot of that passion and that external mission for people around opportunity zones, which certainly have financial incentive for you and your investors if you have them, but also allow you to do some good things. When you're in development, you're creating new spaces, new buildings, new towns sometimes. So we're not here to tell you what to do, but to really figure out what drives you. If it's just about making an extra $1,500 a month, okay, that's not a bad thing. But if you aren't clear on the why, it's hard to stay motivated. It's hard to keep your head in the game. If you're impassioned by what you're doing, social capitalism, if you will, something that real estate can do for the world that you can help and profit by, that's what we're talking about. So don't feel like you have to have a big external mission, but at the very least, you need to understand what it does in your life when you are a successful real estate investor.
It's really people. If you think about it, that's what it's all about. If you have a successful real estate investing business, you are providing housing or real estate that people run their businesses in, and that's valuable. You're maintaining that and taking personal responsibility for making sure that asset is serving society in some way, shape, or form. That's great. You're creating jobs, and that's great. You're feeding a lot of other families. That's great. You're participating in the commerce that makes everything go. I mean, clearly in lockdowns, we're seeing what happens when large swaths of people just get completely taken offline. Everything stops, and it requires emergency injections of cash just to keep things afloat. And that's not sustainable, any more than being on a heart-lung machine and having a breathing machine and a heart machine, pumping and circulating your blood. I mean, that's not living. Our economy isn't living when people are locked down and the Fed is just interjecting money. Well, being part of that commerce is a real important part of being a real estate investor. So that alone is worth it. But I guess what I'm saying is that if you look at what you do in terms of money, in terms of physical structures, in terms of acreage or assets or barrels or ounces or however you look at it, if that's what you're fixated on, then I think you're missing one of the great joys of being in business or being an investor. And that is what you are doing for other people. And of course, you're among that group, and your family and your loved ones are among that group. But if you put a human face on it, then it all becomes very compelling, unless you're a complete sociopath.
So another way that we approach zero-based thinking is to look at the markets that we're in. And we talk about markets, certainly the geographic markets. Maybe you're in a handful of markets that have done well, but of course, things change and shift. We've talked in the last weeks and will in the coming weeks about these big trends that we're seeing, where there's net in-migration and there's net out-migration. People are leaving certain areas and going to other areas for job opportunities, for education, for freedom. Whatever their reason is, people are moving. And when people move, that creates opportunity potentially for real estate investors. So you want to look at the markets that you're in and maybe some potential markets to consider, but not just geographic. We also talk about product type. I talked earlier about maybe you've been a single family investor looking to be in multifamily, but there's even more nuances than that. Based on these big trends, are there other things you want to be investing in? And it's a lot to think about. So start thinking about the markets you're currently in, both the product type, the demographic you serve, and geography. And then where would you want to be? And again, it doesn't mean you're going to instantly jump into that market, but the beginning of the year is a great time to be thinking about it. The same thing also holds true for the relationships that you're in. Now, you have some vendor relationships. Hey, I've got a, person that I use to, garden in my apartment complex. Okay. If that's all working and the price is good and the service is good, great. But the beginning of the year is a great time to just review those relationships. Then you have your more, important relationships with your tax professionals, your legal professionals, your property manager. And this, I think, is the time to just take a look at that stuff. It's really easy to put it on autopilot, but in the post-COVID era, we got to pay closer attention.
Yeah, well, I think, if you look at it using football as an analogy or any sports team, you have different seasons that you're in or different parts of the year that you're in. You have the time where you're in your preseason and your camp and you're kind of get everything ready, getting to whatever your MVP is to be able to field a football team. And then you put the team on the field and, it used to be you'd have a preseason, and during that preseason, you'd kind of test players out and see who you wanted to keep and who you didn't want to keep. And then you'd have your regular season where you trimmed your roster and you were competing in order to make it into the playoffs. And then when you got into the playoffs, you were competing to win a championship. And most teams don't succeed at that because there's only ever one champion and everybody else is an also-ran. And then people evaluate. They look at the statistics of the season and say, okay, how did we do? Where do we need to make changes in order to try to win that championship again the next year? Well, the beginning of the year is when you're closing the books. If you're on a normal, fiscal calendar year, you're going to shut your books on December 31st. And this is the time of year where you're gathering up all that data and you're going to look back and say, okay, what did the statistics say? How did we do? Did my equity grow? Did my cash flow grow? What was my after-tax cash flow? How hard is my balance sheet working? Can I make it work better? Do I have underutilized assets? Do I have underperforming assets? And then you look at your team, because your team, to your point, Robert, is the people who are making all this stuff happen. And you have to say, okay, are there areas where I could make upgrades? Now, sometimes it could be, hey, do I have a team member with undeveloped potential? Is this somebody that I can work with? Maybe I can learn to work with them better. I can become a better customer. They can become a better vendor. We need to communicate more. Maybe it's just like, hey, this person is at the top of their game and that's not enough for me. It's not personal, but it's not a match. Maybe you've learned things about them philosophically and you decide, hey, the way they do business or the energy they bring to the relationship isn't feeding me, they're not working well with the other members of the team. Those are all the decisions you have to make as the head coach, the general manager, the CEO, I mean, whatever, band conductor, I mean, whatever title you want to give yourself, you're the person who's responsible for having all of these components gel together into something that is actually moving the entire enterprise forward towards that vision that you have, as the visionary or the CEO of what you're doing. And that's how kind of all these things fit together. Of course, if you're, a captain of industry, if you're a business person, you understand this stuff. But if you have been a worker bee your whole life and you've made a little bit of money and you're starting to invest and you've never sat in that seat before and you don't know what it's like, these are the types of things that CEOs and leaders of organizations and portfolio managers think about.
And one little idea when it comes to the human capital that you have, whether those are employees, and some of you have big enough businesses to actually employ folks, or just vendors, sometimes the best feedback you can get is from other people on your team. We have blind spots as leaders and we think it's working great, and you ask your other team members what they think and here it comes, right? So just know that there's places to find that information. It's not all going to come from you. We're talking today about building a new plan for a new year. We've got lots of more ideas and a chance for you to win a prize as we play the first real estate trivia contest of the new year next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Hear ye, hear ye. Registration is now open for the Real Estate Guys 19th Annual Investor Summit. Imagine spending an entire week with like-minded investors, world-class educators, and real-world professionals. Returning this year, our sales legend Tom Hopkins, the editor of the Gold newsletter Brian London, international real estate developer Beth Clifford, and Jim Rohn's 18-year business partner Kyle Wilson. And joining us live and in person for his 9th Investor Summit, Peter Schiff. Plus, returning for his 9th Investor Summit, best-selling author and the Rich Dad advisor for real estate, Ken McElroy. Plus, lots more to be announced. It all begins June 11th in beautiful Belize. Visit realestateguysradio.com and click the tab that says Summit to reserve your spot. This transformational week is like no conference you've ever attended. Go to realestateguysradio.com and click Summit and make plans to spend a week with the Real Estate Guys, Peter Schiff, Ken McElroy, and an all-star faculty on the 19th Annual Investor Summit.
Having trouble finding deals where the numbers make sense? Invest in an asset class that delivers cash flow to you in good times and bad, and where most of that cash flow is tax-free. I'm Dave Zook. Many of you have heard me speak at Real Estate Guys events or heard me on their podcast. My team is a top 5 ATM operator in the country, and right now accredited investors can make cash flow returns well into the double digits and get huge tax deductions. For your free report on this lucrative asset class, email atm@realestateguysradio.com.
Hi there, this is Danielle DiMartino Booth, author of Fed Up, an insider's take on why the Federal Reserve is bad for America, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. We're glad you're here. Sorry we missed you last week. It was our annual goals retreat, and so we took the week off. This week we're talking about your new plan in a new year. It's the perfect time to retool yourself for 2021. Before we get back to that conversation, it's time to play real estate trivia. That's your chance to win a prize by knowing today's real estate trivia question. In a minute, when you hear the question, as soon as you think you know the answer or just want to guess, send your best guess to trivia@realestateguysradio.com. That's trivia@realestateguysradio.com. First person that gets it right gets the awesome book, Success Habits of Super Achievers. It's an Amazon #1 bestseller, and you can get a copy if you know today's real estate trivia question. Last show, we had Scott Abernathy from the National Association of Residential Property Managers with us. We asked this: one New Year's tradition is to eat 12 grapes at midnight on December 31st while making wishes. The tradition is believed to bring good luck for those who practice it. Where did it originate? Well, the answer is the country of Spain. This grape eating tradition started way back in 1895. Here's our real estate trivia question for this week. In which U.S. state is it illegal to slurp your soup? Yeah, it's frowned upon in a lot of states, but in one state in the U.S., it's illegal. If you know or live there, or maybe you just want to guess, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. We'll need your name, the answer to the question, and a mailing address, because if you're the first to get it right, we're going to send you Success Habits of Super Achievers. Find out more at getsuccesshabitsbook.com. That's today's real estate trivia question. It's a brand new year, and we're encouraging you to put together a brand new plan for your real estate investing business. Some things you'll keep doing because they're working well, but there's probably some room for improvement. In all of our portfolios, I'm going to guess there's room for improvement. No matter how much you focus on it, if you just once a year sit back and say, okay, if I had to change one thing, what would it be? There's a lot you can look at. And so one of the things we have to face right now is just the new market realities. We've been through the coronavirus and just all the things that has meant to real estate investors. In certain markets, there have been great tenants who lost their jobs and entire industries that have gone way down. And there are places where it's illegal to evict tenants even if they haven't paid. And so you definitely need to address those realities. And I think one of the things to focus on is whether or not this is a short-term, mid-term, or long-term change. It was easy when COVID started to just assume it'll all be over in a few months. Now I don't think people are thinking that way. And I think many of the protocols and the sensibilities about how people are approaching cleanliness and distancing and showings and all that may be here to stay. And you really got to figure out, how does that apply to your business?
Yeah, and it's a hard thing to figure out. I've been paying a lot of attention to this, and sometimes you have to look at people, and it doesn't really matter what the facts are. It doesn't even matter what the truth is. What matters is the way people are responding to it. So I've listened. As Robert well knows, I'm the kind of guy that listens to extreme views from time to time because I just want to kind of see. Some of the views that were very extreme 20, 30 years ago have become mainstream today. And so sometimes you can get advance warning from people that are willing to see the future in a way that a lot of other people aren't willing to. Sometimes it's just absolutely crazy, right? And it's not true at all. And I've certainly experienced that as well. But the point is, it doesn't really matter. What matters is that markets are made up of people, and what people think and believe and how they behave is what makes the market behave the way it does. And the market can be irrational. The market cannot make sense. And so you have to figure that out. When we started seeing companies like Oracle and HP and Tesla moving out of California, right? That's pretty substantial. That's telling you that the market conditions in California from the CEO's perspective of these major companies is to the point where they're making major investments. They're making major moves to change. Well, that's worth paying attention to. If you see that happening, if you're in the market that's on the receiving end, it's like, this market, in this case, Texas, must have some things going on that people who have jobs, create jobs, and command billions of dollars of capital like. And then whatever is taking them out of wherever they left compared to what must not be, and it must be so bad that they feel like it's worth the pain of change. So those are the kind of clues that we look for. Whether you agree or disagree, this is the hard part as an investor, but you have to remember, whether you agree or disagree, it doesn't matter what you think, because they're not asking you your opinion. Larry Ellison didn't call me up and say, hey, Russ, what do you think? Should Oracle move? No, he didn't call me. He did what he wanted to do. And so I'm just going to look at that and say, okay, well, that's a point on the curve. If I'm in California, that's something I'm going to pay attention to. If I was thinking about going into California, that's something you're going to pay attention to. If I'm in Texas or thinking about going into Texas, that's something I'm going to pay attention to. And these types of things are going on all around you. You look at the way I think 100,000 restaurants have closed. Well, a lot of these are mom and pop operations. They're not going to reopen. So then you have to ask yourself, well, is that because of the demand for eating out has gone away? Or is that demand temporarily frustrated because they can't go out because the restaurants are closed, but as soon as they are, they will? And if those restaurants are gone, are they gone permanently? I'd make the argument a lot of those mom and pop restaurants are gone permanently. But that means maybe that the remaining restaurants are actually going to boom if the demand comes back. So these are the kind of things you need to be thinking about. What types of industries are permanent? You know, a lot of people, we've been talking for a long time about energy, healthcare, agriculture, residential real estate as being kind of essential. Ever since 2008, we've been very focused on what's real, what's essential. Office, you know, that's changed a lot. A lot of people doing meetings on Zoom, and this is the new normal. Right? So you have to ask yourself, well, do I want to be in the office space? If I do, what kind of office do I want to be in? Medical office? Probably. Other types of office? Maybe not. So again, these are the things that strategic real estate investors are thinking about right now.
Well, and we want to capitalize on trends as well. So we want to be paying attention. You know, one of the big trends that people were talking about halfway through 2020 was this, you know, flight to second and tertiary markets. Well, that's something that takes some time. Infrastructure doesn't change overnight. And yeah, maybe I can work from home now, so I don't need to be as close to headquarters. But is that permanent? That's the part you got to wrestle with. And we're not really here to give the answers on that. We don't know the market you're in. We don't know the products that you're involved with. We don't know where your tenants work in terms of industry and so forth, but you do. And there are some changes coming. You know, I would say something like the eviction moratorium by its very nature has to be short term. You can't just forever not allow income to flow from tenants to landlords. That's not going to work forever. Landlords vote too. But temporarily, it's certainly been a problem for a lot of investors. And as we talked about last week on the show, for a tenant to get caught up when they're 8 months behind, it's not likely to happen. So we have to also brace ourselves and prepare for some of these changes. But looking ahead, you just want to be asking yourself, what trends do I see? What new opportunities do I see? Knowing the team I have, knowing my experience, are there things that I think might do well in the future? And this is just the process of thinking about your business. Russ, I think in the time remaining, let's shift gears a little bit and talk about the deliverable for today. So maybe you do this every year, maybe you've already done this, but if you haven't, we're going to strongly encourage you to come up with an actual business plan for your real estate investing. Not just a vague idea of what you want, but a written document. It doesn't have to be 1,000 pages. But I know, Russ, this is something you've done, you've had experience with. Your dad was masterful at this. Let's talk a little bit about putting together a real estate investment business plan.
Yeah, well, I mean, it starts out, of course, with your compelling why, what it is you're trying to accomplish both internally and externally. We've talked about that. Then based on that, you know, you come up with some type of an investment thesis, and we've been talking a little bit about that. We talk all the time about personal investment philosophy. In fact, this probably would be a good time, you know, since we did that a few shows back, but I think it would be a good time to offer again to folks the opportunity to get that audio and that worksheet that you created, Robert, on personal investment philosophy. It's a great time to reassess that. Just send an email to PIP, P-I-P, like personal investment philosophy at realestateguysradio.com, and you can get that. It's just a worksheet and an audio that Robert did, and it's very, very helpful if you've never gone through that process. And so you kind of come up with that. Now, when you get into the math of it, I mean, if you're going to have a business plan, it's ultimately going to come down to math because you're trying to create some type of an outcome. And so you figure out, what am I aiming at? And, you know, what you're aiming at for most people is a stream of passive income. Most people's initial target is, hey, I want to get out of the rat race. Once I'm out of the rat race, then I can reinvest my time and my money into growing my portfolio further, doing more good in the world, spending more time with my family, whatever it is for you. And so you have to figure out what that is. Well, you know, the way you decide that is you say, okay, well, what is kind of the yield on equity that's available out there, and how much equity do I need to create in order to generate that kind of yield? And then you have two paths. You can say, okay, I'm going to create that out of my own savings, out of my own management, out of my own, you know, managing my balance sheet, or I'm going to go raise money. And the shortest path to doing this, obviously, is to go raise money, because there's a lot of people out there, probably, if you're a normal person, that make a lot more money, that save a lot more money than you do. And so that's why we're such huge proponents of syndication, because it combines the power of building a business with the power of investing. And those are two of the best proven wealth builders for average people. You put them together in one activity, and you go out there and help other people who have a lot of money put their money to work. And so you have to become whoever you need to become to be a good portfolio manager, a good asset manager that people are going to trust their money with. But however you choose to do it, you got to figure out, what do I have to build? And then everything that you do from where you are right now until you get to the point where you've built that is you're looking for the best way to get there according to your personal investment philosophy, your personal business philosophy. You never want to do things that compromise your values, your integrity, or cause you to live a life you don't want to live. But assuming that you've got that part figured out, you really have to figure out what is the most efficient path for me to get to that critical mass, that amount of equity that I have to generate the cash flows I need to hit that initial target. And so let's just say, I'm just going to make up numbers. Let's say that your target is $100,000 a year. I want to make $100,000 a year. And you say, I can get 10% on equity. Then you know you've got to go create $1 million in equity somehow. Maybe you buy junky houses and fix them up. Maybe you go raise $10 million and you get 10% of it. And so you get a net of $1 million for being the guy that puts the deals together. However you choose to get there, you've got to find a way to get there. And that's what you focus on in the beginning. And then once you're there, then the world opens up to you, because once you've gotten to that critical mass and you've gotten that out of the rat race, now you're able to start really compounding. It kind of goes like a hockey stick. You're kind of chugging along, and then you hit this crossover point where it just takes off. And so to me, that for most people listening, you're probably in the, hey, I just need to figure out how to get out of the rat race component. And then once you're there, then you can come back and revisit and say, okay, now how do I really optimize this portfolio for great risk-adjusted growth and to accomplish all the wonderful things that I want to do in the world?
You know, if you were going to plan a cross-country drive, you were going to go from one coast to the other coast, say here in the United States, you have your destination, and that's what it's going to look like when you're there. And that's critical, and that's a lot of what we've been talking about. But you're also going to plan out your route. You know, Russ, you talked about the most efficient. Well, we're going to look at the fastest way to get there, or maybe we look at the more scenic way to get there, depending on our objective. We're going to look at the places we stop in the meantime. We're not going to make it without getting out of the car, right? Are there places we want to see? And while we're going, what's important to us? That's what a business plan does. It's where are we going to end up, but also what are the interim steps? What are the milestones? So it's a lot to think about. And we're just going to urge you to put it in writing, because that is what you drive towards. It's an editable document. A business plan for most real estate investors is a living, breathing thing. It evolves as you do. Maybe you've already got a plan, and maybe you put it together 5 years ago. If you were to read it today, I'm guessing that some things have happened that weren't in the plan, and probably some things that were in the plan didn't happen. And so retool it. It's time to, you know, this zero-based thinking thing, it's a blank canvas. You got some things that are working for you, and you got some things that you're going to change. When we come back, we're going to talk about what it is that you measure, how you can get some effectiveness and efficiency in your portfolio, and we'll have some closing thoughts. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
For thousands of years of human history, silver has been recognized as money. Then in 1965, the United States took silver out of the financial system. But did silver stop being money? Smart investors don't think so. And ever since, when there are concerns about the quality of the currency, alert investors seek shelter in silver and gold. As the size and frequency of major financial crises grow, silver is attracting a lot of attention. To help better understand the what, why, and how of silver, watch the free 9-part series, Making Sense of Silver. Everything you always wanted to know about silver but didn't know to ask. Featuring 30-year precious metals veteran Dana Samuelson. Send your email requests to silverseries@realestateguysradio.com. Whether you own silver now or you're wondering if it's too late, email silverseries@realestateguysradio.com. Hungry for more real estate investing ideas? Here's 2 steps you can take today. First, go to realestateguysradio.com and sign up for our weekly newsletter. You'll get access to a continuous feed of thought-provoking commentary specifically for real estate investors, while also focusing on broader picture economics. Then, once you're at our site, look for the Resources tab, where you'll find our amazing collection of special reports. Browse dozens of white papers, webinars, and market reports, and request the ones that appeal to you. What are you waiting for? Head to realestateguysradio.com to implement education for effective action.
Hey everyone, it's Brad Sumrock. Happy New Year, and I'm so excited that for the first time ever, we are doing an Invest in Apartment Challenge. And this is a free 5-day event, and I want to help you invest in apartments in 2021. By participating in this 5-day challenge, you're going to get to leverage my 19 years of apartment investor experience. And this is for anybody that wants to be a successful apartment investor. And if you're not already investing in apartments, then 2021 needs to be your year. So I'm excited to help you get into the apartment investing business in 2021. See you in the challenge.
Join Brad Sumrock and his special guest for the 2021 Invest in Apartments Challenge. Send an email to apartmentchallenge@realestateguysradio.com to learn more and get registered. It's free. That's apartmentchallenge@realestateguysradio.com.
Hi, I'm Aaron Katusa, the chairman of Katusa Research. You're listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. We're looking forward to having an amazing 2021. Lots of great guests planned, lots of great shows, and lots of great events. Find out where the Real Estate Guys will be, both in person and virtually, our events, other events, by going to realestateguysradio.com and clicking events. We're talking today about putting together your plan for the new year. And once you've got your business plan, once you've got your mind around a lot of these things, then you need to be thinking about what your key objectives are and how you measure those things. So we say we want to be more profitable. All right, well then part of your mission may be to do a deep dive into ways you can increase revenue and ways that you can reduce costs. I'll tell you what, this is a place people get complacent. You know, in some areas of the country, it's not only possible, but practiced by many real estate investors. Well, they will debate or challenge their property taxes. That doesn't work everywhere, but there are certain states where this is a regular thing. There's businesses that do this. They, on your behalf, go to the taxing authority, challenge your property tax, and they split whatever savings with you. So if you've never done that, that's a way to instantly save some costs. There's other areas where there are multiple providers of things like electricity and internet, and you can shop around. Again, we get complacent. We're like, I don't even think about how my power gets into my outlets. Well, in many states, that's a very competitive arena. So, again, we're not going to get into the details, but it would probably behoove you to go through and just ask yourself in a whiteboard, where are some ways we might increase revenue? What things would my tenants be interested in having that they would pay for? Are there some profit centers there? And then what are some ways that I can reduce overall costs? And that's a great way to go. And then there's this whole thing about what we call your KPIs, or your key performance indicators.
So, Robert, let me just jump in with a couple of thoughts that are maybe a little random, but I think important. So I like to parse problems and then attack them in their components. I find it easier because sometimes some of this can be overwhelming. You talked a little bit about managing what I'd call the P&L, right? Top line, bottom line. And so that's really, really important because equity is a byproduct of cash flow. When you increase cash flow, you increase equity. And so that's a real important concept. Use the 80-20 concept, the Pareto Principle. Look at where 80% of your expenses are and then focus on those things, because it's usually going to be 20% of the items, right? And so it could be interest, it could be insurance, it could be, you talked about property taxes. That's a big one. And you want to try to attack those the best way you can. And, you know, even though labor is a big expense, sometimes you got to be careful. You go after labor, and the very people who are responsible, and this is the human factor, for taking great care of your property, taking great care of your customers, and all of a sudden you're going after them. That can end well. That can be a false economy. Look for ways to cut places in other ways that create better value and give you more to work with for the people. And so that's number number one. But the other area is your balance sheet. So a lot of people spend a lot of time on the P&L and they don't worry about their balance sheet. And a lot of people have equity on their balance sheet right now that isn't really working effectively. Way back in the day, you know, when I was a financial strategist and in that, really active in that, I spent a lot of time helping people unleash the power of their balance sheets because their balance sheets were sleepy. Right now, we've had 15 consecutive all-time lows in 30-year fixed mortgages in residential real estate. So if you haven't taken a look at the debt in your portfolio and look, hey, can I restructure that debt? You can probably remove a lot of interest. If you haven't taken advantage of a lot of the tax benefits, maybe you don't have enough passive losses on your balance sheet. In other words, you don't have enough depreciation on your balance sheet. And so that'll affect your P&L. And so there's things that you can do. So look at it first in your P&L. And then look at your balance sheet and ask yourself, how can I make these things perform better? It really is math. And so those KPIs are, you know, that Robert talked about are really the key performance indicators are going to be things like occupancy, things like collections, you know, satisfaction, if you can quantify that, making sure that your people on both your team and your customers are happy. And then sometimes some of those surveys and some of the things that you do with your customers, to your point, Robert, will open up ideas. Well, hey, I really wish that we had a game room or a laundry room or storage or something, and you can find ways to monetize those unmet needs. And so don't just think in terms of numbers, in terms of your key performance indicators, but also think, if you can, to try to quantify satisfaction. When people come to our seminars, we always ask them at the end to give us a rating on it, like a GPA, a 1 to 4 scale. And then we can figure out how we're doing in our events numerically, but it also gives us an opportunity to say, hey, what would it have taken for it to be a 4 instead of just a 3? What was missing? And then those are how we can actually make improvements, and we can tell how we're doing if that KPI, that grade, that GPA starts to go up a little bit. So try to build those things into your business going forward, and you'll get a lot of great feedback you can actually manage off of.
We wish you great luck and success in the new year. If you are interested in learning about your personal investment philosophy, getting that audio workshop, just send an email to PIP, Personal Investment Philosophy, PIP at realestateguysradio.com. Coming up, we've got an Ask the Guys episode. If you have a question for the Real Estate Guys, all you have to do is go to the website at realestateguysradio.com and click the button that says Ask the Guys. We certainly don't answer every question that comes in, but we're going to answer a bunch of them, and we'll be doing that show several times throughout the new year. Happy New Year to all. Go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors. From attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.